And let's continue the conversation around technology. A little bit softer, ripped through 2017. I think we've got to get the year-to-date figures on the screen still and really show where we still stand on the year. But that softness, where's it coming from? The fact that we've just come from a big couple of months?
Well, for the most part, yes. And I'll preface this by saying, long-term, UBS still looks at it as an overweight sector. But when you have a relationship the first 6 months of the year where the energy sector is in effect on a day-to-day basis trading as if it was a technology put option, being outperformed by the tech sector by 35%, that kind of relationship is inherently unstable. And we did some work showing that the FANG stocks, in essence, accounting for more than a third of S&P returns prior to last Friday, was making investors uncomfortable. However, it's not unusual. So the softer side of the work showed that technology was likely to underperform on a 1- and 3-month basis. But eventually what happens is it's a buying opportunity.
Steve, in some ways, and counterintuitively in a lot of people's minds, it's been like a defensive sector. You get that secular growth story, you avoid the reflation story, you avoid the DC agenda full stop. Is that what's happened with tech in your mind? We've had a lot of people on this table say exactly that.
I think so, that there is, obviously, we do a lot of work not only in the economic cycle and valuations, but in momentum. So sentiment, momentum, they're very powerful in the near and the short term. Ultimately, however, valuations win the day. You know, with valuations, you can run, but you cannot hide. And looking at valuations right now in relation to fundamentals, that's something that you need to consider within equity space. It's also a significant consideration. But I would say the larger question is, you know, very strong indicator. We've been getting the valuation component of U.S. equities in a global context is something that has given us a cause for concern, and that's why we have tended to rebalance globally, looking at Europe as a #1 destination for the last number of quarters, and then looking globally within multi-asset space.